All right, you guys, I'm gonna co-host and let people in as they come in and work the little mutes and stuff. He wants you guys to be able to ask questions, so don't hesitate to ask questions. And we're gonna record this. Oh, it's already recording, so hang on while we do the switch. Thanks, everyone. All right, babe. High five. Should we chest bump? No?
Hey, everybody. So this should be relatively simple and short training because it's just a very niche topic about calculating your position when you're trading. So some of you, if you're really new, this may be like over your head information because maybe you haven't finished the academy. And so if that's the case, you can always come back to this in the future where it'll be recorded and stored on YouTube and refer to it then. And if you've been in a while and you're already trading Forex, it might be repetitive. But for all the people in between, this is for you. All right, I'm going to share my screen. Okay, so I posted this website inside of our Facebook group. So you guys can copy and save that to like a notepad on your phone or in the browser favorites of your computer. But basically, this is a calculator that helps you calculate the proper lot size that you want to use for your Forex trades. And it is only for Forex. It is not for indices like US 30 or NAS 100. And it's not for things like gold and silver, and not for cryptos either. Can you admit people? Yeah. So yeah, just Forex, and so that'll be a whole nother class on calculating position size for those other things that I mentioned that this doesn't cover. But you can see here it's pretty straightforward. At the very top is your pairs of your Forex pairs. Hey, babe.
Yep.
You got that echo?
Yep, I'm getting it.
And then over here, you're always going to leave this as US dollars. And then account size. So for instance, if we have a $3,000 demo account, and it's still at 3,000, we would put 3,000 there. And then if we want to risk a certain percent, I like to risk 2% on pretty much every single Forex type of trade that I do. Different educators for different strategies that you may be following may use different percentages. I've seen anywhere from 1 to 5. I've never really seen anybody talk about more than 5. 2 to 3 is very common. I've learned most of my Forex stuff from the Delorean educators, and so they're very firm on using 2%. But of course, you can change this here anywhere between 1 and 5. But definitely would never do more than 5 on any trade. And then stop loss pips. This is where you got to do a little bit of work. And so just for an example, if I just put 20 in here, and then I hit calculate, it's telling me that for this particular pair, for this size account that I have, for this amount of risk, and this amount of pips that I potentially may lose in my stop loss, that I can use a 0.3 lot size. And you'll notice down here, it gives you 3 digits after the decimal. But in MetaTrader 4, we can only put 2 digits. So you can always just ignore that 3rd digit, or you can use it to round up or down if it does give you some digits there in the 3rd spot. But basically, if I use a 0.3 lot size and my trade hits stop loss before it hits my take profit, I'm going to lose $60 on that trade, which is 2% of 3,000. So it's pretty simple and straightforward. Now, if you had a bigger stop loss, let's say it was 100, and you calculate that, you're going to notice that the lot size that you can use now is much smaller. Right? It's 1/5 the size. It used to be 0.3, now it's 0.06. So obviously, the more pips that you potentially could lose, the smaller you have to make your trade to still only lose $60 if you do lose that trade. All right, so I'm gonna cover, really, I'm gonna show you how this applies in real trading shortly, but I just wanted to kind of introduce you to this calculator. So I know a lot of us are learning Delorean. So I'll use Delorean as an example. And what I'm going to use as an example here is not going to be super exact, but for the purposes of this training, it'll help you just understand and see the picture. So with Delorean, this happens to be a buy trade idea. You can see here is a blue arrow. It's a little old. It's like 4 candles old. But what you do when you decided that you are going to take a trade, you can use this tool here, and you can choose a long position or short position. So long position means it's a buy, short position means it's a sell. So you choose the long position tool and you drop it right where price is, let's say. And then the bottom pink half represents your stop loss area and the top represents your take profit area. So for this example, I'm just going to say that we're going to put a stop loss here. And we're going to put a take profit up here, let's say. So this line would represent your entry if you're going to enter at the current market price. And this is the end of your stop loss. So in order to fill this out correctly, you have to figure out what the currency is. So up here we have Canadian dollar, Swiss franc. So that would be the first thing we want to do. And then in this example, we'll have a $3,000 account, and we'll want to risk 2%, but we want to make sure we enter the stop loss pips correctly. So what we do is once we draw this out, it's kind of telling us what we need to know. But right here, in this this number right here, 33, that's 33 micro pips, which is actually 3.3 pips. Okay, so that's one way to figure that out. You could just look at this and add a decimal. I'll make this bigger so you can see what happens if it was really big. So this is 13.3 pips. Okay, I'll put it back at 33. So 33 micro pips is 3.3 pips. So I could put that here, 3.3, which is a really small amount of a stop loss. So it's going to let me risk a very large amount for the lot size. So I hit calculate, and my lot size can actually be 1.68. If I wanted, I could round that up to 1.69, but that's close enough. 1.68 is going to be the size that I would want to risk on this trade for this particular currency pair. And then as far as other ways to calculate your stop loss, and you could use this ruler right here, and you take it from where price is, and you drag down to where your stop loss is, and you see it's saying 34, so I'm off a little bit, 33, and so that's it. There's 3.3 pips there. Another way to measure it. And then the last way to measure actually is right here. So where the middle of my line is this black number. So 0.7383 and then 0.7380. And then the difference between the last pipette. So it's really a 3.3, the difference between this number and this number. So there's 3 different ways to calculate it. And obviously we're getting the same answer with all 3 ways. And that's how you would calculate and find out what to put here. Now, for those of you that are familiar with Delorean, this is hyperdrive. So the stop losses in hyperdrive are typically pretty small because we're looking at small candles. These are 5-minute candles. It is possible that like stop losses would be much bigger. We'll use an example. We'll go to shadow, and we'll use this shadow trade as an idea. So this is an idea that was given by one of the educators. And they're saying that this is going to be a pending order, but this is the price that you're going to want to enter the trade at right here where it says sell limit. It's going to be a sell. Right? You got a red arrow, it says sell limit, take profit is below, so that's a sell. Stop loss is above. So there's a few ways we could calculate this. We could put a short position tool on the chart there. And then as you can see, you can, this is 77.7 pips. Or if we want, we could use the ruler. And I think I did that wrong, right? Hang on. Let's get that short tool again. So just this portion, it's 180.3 pips from here to here. And then if we use the ruler, 180.3, okay? And then if you wanted to break out a calculator and put in 0.93420 and subtract 0.9160, you'd get the same result. Okay, so that's pretty much it. The reason why this is important is you want to be consistent with the amount of risk that you're doing on each trade. So that's why I always do 2% risk, because you don't want to do 2%, 2%, 2%, and maybe you won 3 times in a row and you're like, oh, I'm going to go do 10% this time because I'm winning a lot. So that happened to be the one you lose, you're going to lose everything you just won on 3 trades if you're in like a 1 to 2 risk to reward ratio, and then you're going to even be negative. So consistency is very, very important. And or if you're doing 10% trades and you lose 3 in a row, you're already down 30% of your whole account. You don't want to do that. This is a long-term game. You want to have a long-term mindset. And with 2% losses and 4, 6, 8, 10% wins, you're going to slowly but surely grow your account over time, as long as you're doing, of course, everything else right. But sticking to a consistent risk ratio is important.
Michelle wants to ask a question.
Okay. Can you
Jim,
unmute?
what is the contract size?
What
What does that mean? It's on the tool that you just showed us.
Oh, over here? Yeah, so this never changes.
Just leave that there, ignore that.
Yeah.
Okay.
Yeah, that never changes.
Okay, good. And on that shadow thing, that Delorean shadow?
Yeah.
How come it doesn't have all those blue lines and yellow lines? How are we? I thought that's part of Delorean, right?
So good question. The Delorean strategy itself is really big into the EMAs, right? The exponential moving averages. So if you go to the regular Delorean, you'll see all those lines, and you'll also see them on the hyperdrive.
Yeah.
And the reason you don't see them on the shadow is because shadow is actually not based on the Delorean strategy. The shadows usually are based on some type of like Fibonacci levels or retracement levels, which is just a completely different thing than Delorean. So the educators that train Delorean, and even no matter what you're out there learning, if you're learning pivots, levels, bounce back, educators will teach about it, and they'll teach you how to use that tool, and they'll base a lot of their sessions on that tool, but they're not married to one way of trading. So they'll introduce you to, and they'll give you trade ideas that are based on other styles and other strategies. So the shadow alerts are just that. They're other trades that the educators are picking up on, that they're seeing potential for. And so they will put them in here, and that's why you're not seeing the lines like in Delorean.
Okay.
I want to give you guys just a couple other examples. Sometimes, depending on what kind of trading you're following, if it's not Delorean, you might get an educator that has their chart up. This actual chart is, I got these numbers from Bryce Bowers from his boot camp. So he said, you know, he's selling Euro GBP on the 15-minute chart. But he says the trade is not active yet. Right? We got to wait until a candle closes below this line. And when it does close, the trade then becomes active, and then we take it. We don't want to take it early. But in his message that he sent out, you know, he gave us a stop loss. He gave us the entry point as long as it crosses below it. And then he gave me 3 take profits. I just put the first one down as this line. I didn't put the other ones. But in this case, you know, what we're interested in order to be able to calculate our position correctly is the pair. So that's Euro, Great Britain pound. And then of course we have our size. And then, like I said, for me, I can risk 2% always. At Bryce actually, sometimes he says 1, 2, 3%, or he'll say like 3% max. So let's just say you did 3%. And then we need to find out what those stop loss pips are. So the easiest way for me is just to grab that ruler. And, you know, it doesn't have to be exact. If we do happen to hit the stop loss on this trade instead of take profit, my goal is to only lose like $60. But if it ends up being 61 or 59, like that's really not that big of a deal, as long as you got it pretty close. So this is going to be close to 60 pips. So we just put that in here and calculate, and now you have the lot size you can use. And then another thing that you can add on to this, or another thing we can piggyback on, is sometimes the educator will give you 3 take profits.
Yeah.
And so you only want to risk 2% total for the whole trade idea. So that doesn't mean that you're going to risk 2% on that one, 2% on that one, and 2% on that one. We got to divvy up that 2% across all 3 of these positions. So you can ignore my lot sizes here, but in the example here, we have a total of 0.10. We could round up to 0.11. So we have a total of 0.11 to divide up between 3 different trades. In case we hit our stop loss, all 3 trades are going to close in a loss. Okay. And if we only want to make sure we only risk 2% total, then the combined 3 trades cannot be more than 0.11. So you might do 0.4 on your take profit 1 trade, 0.4 on your 0.4 on your take profit 2 trade, and 0.3 on your take profit 3 trade. And the reason I left the smaller size for the take profit 3 is because that one's going to be less likely to hit because it's the furthest one away, but it's also going to be more profitable because it's going to yield you more pips. So you're still going to get a nice size profit out of that smaller position of 0.3. So that's important to note. A lot of traders and a lot of strategies will give you multiple take profits. Sometimes 2, 3, most I've seen really is 4. But you want to make this calculation and then divide the answer into how many positions that particular trade is saying that you can take.
So do multiple take profits means that as it's going down, you're gonna take profit, a little bit of profit, and then it keeps going and you'll take a little bit more? And is that what that means?
So just for example, I'm not going to put these lines exact. But this could be so these three lines can represent the three tick profits that we're talking about. And you're going to enter a trade here, but you're actually going to enter on your MetaTrader 4 app 3 separate trades. You can't enter multiple tick profits into MetaTrader as one trade. So you have a trade here that's going to start in the down direction. And then you have one and you have one. The goal is that this trade will eventually hit here and it'll close in profit and that trade will be over. And then this trade will keep running. It will hit here and take profit. It will close itself out and it will be over. And then you'll have this last trade where the goal is that it'll hit here. And so you actually have 3 trades, and that's why you put a different lot size on each one.
Okay.
And then, of course, they all have the potential to run up and hit the stop loss. And if that happens, you want the combined loss of all 3 to only be the 2% or 3% that you intended to risk for that trade. Make sense?
It does. Yep. Thank you.
Okay. And then the other day, I sent out some trade information in the group, and it was from one of the Delorean educators, Tyrone Foster. He's going to start doing these, calls them SIFI trades, which is set it and forget it. I'm going to show you guys here just a second. So he gave out this information, and this is pretty much all the information you need in order to calculate what size trade or what size lot size you would use for each trade, right? He's giving us the currency pair. You know, is it going to be a buy or sell? It's going to be a buy limit, you know, buy limit, sell limit, buy limit, buy limit. The entry price that we want the trade to trigger at, and then the stop loss and the take profit. And so that's all we're going to need, right? The pip, the amount of pips in the stop loss is this number minus this number, which happens to be 60. If you subtract this number from this number, it's 60. And if I was to draw this all out on a chart and use the ruler, you know, you're going to get 60. And so CAD, CHF, on a $3,000 account, if I want to risk 2%, and it's going to be 60 pips of potential loss if I hit the stop loss, I can risk 0.09. These particular trades in this example, they don't have multiple take profits, so I can use that whole amount in that one position that I'm going to put. So I will share my phone with you and show you kind of what that looks like, and I'll be doing it on an iPhone. So you guys can kind of translate that to how it would look on your Androids. Or you can maybe search a YouTube video that will show you how. So in this example, I'm going to hit here to add a trade. And then I'm going to change the pair to Canadian dollar Swiss franc, which I don't have here on my demo account. So I'm going to go back and I'm going to add it by going down here to the quotes and hitting add and searching for it here. And when I hit plus, it'll disappear from here because it's been added to my list of currencies I can trade. So now I can trade it. So I go here, I hit add. Now I can pull up that currency that got added down here. And then it's not going to be a market execution because that means we're entering the market right at this current price. And that's not what the instructions are. The instructions are to buy limit. So we just tap here and we select buy limit. And then we're going to use a 0.09 lot size that we got from our calculation. And then the price on the document that I shared with you earlier, the price is 0.7259. And then the stop loss that was shared by Tyrone is 0.7199. And then the take profit is 0.7597. And then you just hit place. And what happens here is, unlike placing a market execution trade where you immediately are either like in profit or you're in a little bit of a loss, this trade's not even active. It's just sitting there. And so there was actually a list of 6 trades given out. And so my live account shows that I have 6 lines here of these pending trades. And they will all just sit there until one of them reaches that price and it will automatically activate. It could be when you're sleeping, could be when you're working, could be when you're looking at it, but it'll just automatically activate. And then all those parameters come into play. You know, is it going to hit the stop loss first? Is it going to hit take profit, so forth. So that's how you do it. Anybody got questions so far?
Yeah, there's a question in the chat, babe, from Shane Green. He says, are you using all your 2% on the one trade?
So if it's one trade idea for one currency pair, I use 2% for that trade. So if it only has one take profit, I use the whole 2% for that one trade. If it has like 3 take profits and I'm dividing it into 3 trades, I'm using 2% for the whole idea, but I'm splitting up that 2% over 3 trades.
Reflecting on all we've lost. Talking to
Okay, so you only enter the one trade at a time?
Well, in the example where I showed you where Tyrone Foster sent out like 6 set it and forget it trades, I will enter all 6 pending orders, and I will do 2% on each one of those 6 different trades.
Okay.
Because they all have their own individual potential. You know, I might win 3, lose 3. I might win 5, lose 1.
Right.
But as individual trades, you know, I'm okay with risking 2% per individual trade idea, as long as they're not related to the same trade, and they're not just different take profit points of the same trade. As long as they're different trades, I can do 2% on each one.
Okay.
All right.
And what's the idea of how long is that supposed to take for these to go active? Is that like a week, a month? Who knows? There's no idea.
Sure. It depends on who's putting the trade out and what the idea is behind the trade. So these are swing trade ideas based on a 4-hour chart that Tyrone puts out, and even the ones that are in the shadow for Delorean. So those are longer time frame trades. They could take a week or 2 or 3 even to trigger. Okay. And then they could even take as long, maybe even longer to hit profit. So these are, you know, those longer trades they're called swing trades, and they can go for weeks. And sometimes, you know, it's only a few days, but you know, it's usually more around 1 or 2 weeks.
Okay.
But you could use the same type of philosophy with, limit orders, with buy limits and sell limits and so forth for shorter term trades. Something that you expect to hit in the next, few hours, but you don't want to sit there and look at it. So you just want to set it and have it activate by itself when it gets to a price that you anticipate is going to hit very shortly.
Where's
Okay.
Tyrone putting those out at?
He's only putting them out on his Pip Top, which
Okay.
for me, the best place to access that is this IM Academy app. So they
Right.
will look for iPhone. And
And 1 second, babe, before you go that far. Scotty, did you have a question on the last slide? You can unmute yourself.
Can you hear me now?
Yep.
So I have a question. Yeah, I do. So when you're doing the formula to see the lot size, and I guess I'm assuming my understanding is you want to grow your account by 5% every day.
right,
So if you have $100 account, say, and today you 5% of that is $5. So tomorrow your account is $105. So every day you add a different amount.
yes. Now, yes, I would if I was you. For me, I just I have the same goal from the beginning of the week to the end. So if my account's $10,000 and my goal is 5%, I just make it simple. My goal is $500 every day this week. I can go in there and recalculate the goal every day. But for simplicity, I just make it $500 every day, and then the next week, if my account ended up being 12,000, then my goal is $600 a day that week.
Okay, yeah, it makes sense. Yeah, I always wondered about that.
Yeah, you can compound it by the minute. If you win a trade, your account grew. You can use that as your new benchmark for what 5% is based off of.
Right, I see what you mean. Okay, yeah, makes sense. Okay, great, thanks.
You're welcome. So this app here, if you go up here, like I get my notifications here,
Mhm.
and I get a lot. I follow just certain educators that I want to hear, updates from them, either their trade updates or when they're going, or they might have special sessions. If I tap on this first one, so Evan Cabral, I think there was something wrong with the go live, so he put in here that he's going to be on Zoom instead of go live. So if this is someone you follow on a regular basis and you're on a go live channel and he's not there, it's cool that you're on here and you can be connected to updated information about what's going on with the session because you're on this Pip Top. And then you can search. You can search people you want to add. If I can find it. Okay. So these are all the different educators that you can add, and obviously there's well over 100. So there's pages and pages of these. But when you want to hear from somebody, you just click the little bell, and then you'll get all their notifications. And so this is the only place where Tyrone is putting out his set it and forget it trade ideas.
Okay, I have a ton of those. So I got to go through them all.
All right. Any other questions?
Can you use the one you just did, like the other on US 30? Can you use where you enter something in and tell it to give it a stop loss and a profit, take profit?
Yeah, I do that quite a bit with US 30.
I noticed that.
Because
That the other night you said you did put it in before you went to bed because you had a feeling that was going to happen.
right. Yeah, so you can't use the position size calculator with indices
Right.
in US
That
30,
part I know.
but for the pending orders, I don't think I have US 30 in here, but yeah, you can do the same exact thing. And so sometimes if I heat, like I knew that Congress was going to most likely pass the COVID relief bill, but I didn't know what time. And so they said, oh, it's going to be in the morning. I don't know. I could be sleeping when it happens. But I knew that it would go up when it happened. And so I put a buy stop, is what it's called. which means that if it goes up, the price goes up beyond a certain point, then your trade will trigger as a buy because you expect it to not only go up to that point, but then once it crosses that point, you expect it to then go above that point. You use that when you expect price on anything, whether it's an indice or foreign exchange currency, to break through a support or resistance. So when you expect something to break through a support or resistance, you put a buy stop or a sell stop, and then you can take profit on top of that. And that way it'll activate when it crosses that line, and then it will close it wherever you tell it to.
So Jim actually made the stimulus check on trading. off the stimulus check being signed. Scotty, you got a question?
What currency, what pair did you, or was it the USD 30 or US 30? Is that what you're waiting for the stimulus package?
Yeah, there's a few of us that trade this US 30 currency, but actually I'll show you.
That tried to trade it.
I'm going to add down here.
Some of us are being successful.
So right here under indices, we have various indices from around the world. So, we have Australia and Spain and France, German 30, Hong Kong 50. And so US 30 is one we're talking about. This is basically the Dow Jones Industrial Average, which, reacts very much to fundamental news. So up with economic news or down with economic news. And so you can trade that heavily based on fundamentals. And then of course, as well as with the technical analysis based on, price action and market geometry and so forth. But that's the one we're talking about.
Thanks. Yeah, super interesting. Yeah, because it's a lot of fundamental stuff too. You learned that from Patrick.
Yeah, Patrick is really good with that stuff. Actually, Patrick did a Instagram live today that was really, really good. I was in the middle of work and I got a notification that Patrick Kenny is going live on Instagram. And so I sat there at work for 45 minutes and watched it. It was pretty good stuff. All right, has anybody got any other questions? All right.
No,
Well,
that was really good. Thank
Good,
you.
yes, excellent. Yeah.
All
One
right.
thing I have to say, you guys, is none of this makes any sense to me whatsoever. And to watch you guys get it and to shake your head that you understand it and to be able to ask questions, I am just so proud of you guys, like so happy for you guys that you're getting this.
Well, Darla, I'm going to be honest.
I love you.
I'm going to be honest. I got half of it.
Hey, you got more than me. I didn't get any of it. Oh God.
No, he's good and he explains it well. So, and it seems silly, but just that, that little graph that shows the take profit and the stop loss section, I've been watching. I'm like, where did they get that from? How did they put that on there? So I'm so glad you did that. It seems really basic, but it's like, wow, okay, now I get it.
Yep, I felt the same way when I finally figured it out a couple of weeks into watching the session. I had to pause the video and rewind it and see what did he click.
Exactly. Yeah. So thank you.
Thank you so much, Jim, for doing this. This is awesome.
Okay, you're welcome. I have a Matty Pips HFX session starting in 15 minutes, so I'm going to.
I know.
Okay.
We
And
keep seeing notifications, so.
we'll get this trimmed up and recorded and posted for you guys.
So Jim, real quick, those little trade suggestions, are you going to continue to put those out? You'll let us know.
Yeah, I'll do that.
Okay.
That was his very first one. He's supposed to be doing it regularly, weekly now. So hopefully he'll keep up with it and we'll get some more on Monday.
Now,
Will he tell us when to get rid of them if they don't ever happen? We'll end up with a really long list.
Yeah. He'll probably put something out if they're no longer valid.
Okay. Thank you.
You're welcome. Bye,
Bye,
everyone.
Em and
Yeah,
Darla.
thanks a lot. Yes, excellent. Thanks.
Welcome.
Bye, everybody.
Bye.